Are you ready for a reality check? Because what I'm about to reveal could change how you handle your money, your savings, and your future. Many experts are now warning that the U.S. could face a major market crash in 2026. That's just a few years away. And if history teaches us anything, waiting until it happens could be a costly mistake.
Hey, real quick, before we jump into the video, please take some time to read the full disclaimer on the screen.
Today I'm going to break down what's really happening in simple terms, and more importantly, the 3 moves every American must make right now to protect themselves. Stick with me until the end, because these strategies could save you thousands or even tens of thousands of dollars. Let's start by looking at what a market crash really means. You might think it's just stocks going down, but it's much bigger than that. A crash affects everything from your 401k to the price of your groceries, your mortgage, and even your job security. When markets tumble, consumer confidence drops, spending slows down, and businesses tighten their belts. This ripple effect touches almost every American household. So why is 2026 being flagged by experts? There are a few signs we can't ignore. First, inflation is still higher than many of us would like. Prices of goods, services, and housing have climbed steadily over the past few years. Second, government debt is skyrocketing. When a country owes more than it earns, it limits its ability to respond effectively to a financial crisis. Third, interest rates are fluctuating in unpredictable ways, which makes borrowing and spending riskier for everyone, from families to big corporations. You might be wondering, should I panic? The answer is no. But you should prepare. Panic leads to poor decisions, but preparation can make a huge difference. Now here's where most people get it wrong. They wait until the market crashes to take action. By then, it's too late. Let's talk about the first move you need to make right now: securing cash flow. You need money that's accessible in case the market drops, so you can pay bills, cover emergencies, or even take advantage of investment opportunities when others are panicking. Think of it as building a financial buffer. Start by asking yourself, how many months of living expenses do I have saved in an account I can actually access immediately? If the answer is less than 6 months, it's time to start building that safety net. Now, some people might say, but saving cash isn't smart because it doesn't grow. And they're right, if all you do is hoard money in a low-interest account. But here's the thing. Cash in a crash is power. When markets fall, people who are desperate sell. But if you have cash ready, you can buy wisely instead of selling at a loss. Ask yourself, would I be ready to buy when the market is down, or would I be forced to sell at a huge loss? Drop your answer in the comments. I'd love to see your strategy. The second move is diversification. This is a fancy word for don't put all your eggs in one basket. It means spreading your investments across different types of assets: stocks, bonds, real estate, and even alternative assets like precious metals. Why? Because if one area crashes, another might stay stable or even grow. History shows us that people who diversify survive crashes much better than those who put everything in one hot stock or one type of investment. A simple way to start is by reviewing your portfolio. Ask yourself, do I have too much risk in one place? Could I adjust my investments to protect against a crash without completely giving up growth potential? And here's a question for you. If you had to pick just one type of investment to survive the next crash, what would it be? Type your answer in the comments. I really want to see your reasoning. Next up is the third move: reducing debt. Debt is a trap that can get worse in a market crash. When the economy slows down, jobs can become less secure, and interest rates on loans may rise. That's why reducing high-interest debt, like credit cards or personal loans, is crucial. Imagine the freedom of not having monthly payments hanging over your head when the next crisis hits. Start by listing all your debts and focusing on the ones with the highest interest first. This is called the avalanche method, and it's a strategy that works over time. You might be thinking, okay, so cash, diversification, and debt reduction. Got it. But there's more to consider if you want to truly protect yourself. You need to think about skills, income sources, and flexibility. A market crash doesn't just affect stocks, it can affect jobs too. People who have multiple streams of income, marketable skills, or the ability to pivot quickly are far better positioned to handle a financial storm. Ask yourself, if my main source of income disappeared tomorrow, what would I do? Could I replace it quickly? Type your answer in the comments. I'm genuinely curious about your backup plan. Here's the kicker. Timing matters, but waiting for the perfect moment is a mistake. Crashes can happen fast, and trying to predict the exact day or month is like trying to catch lightning in a bottle. The smart move is gradual preparation. That means steadily building cash reserves, diversifying investments, paying off debt, and improving skills, not waiting for the news headline that screams, "Market crash." Let's take a closer look at some of the signs that the next crash might be approaching. One major signal is overvaluation. Right now, some sectors of the market are priced extremely high compared to historical averages. This doesn't guarantee a crash, but it does increase the risk. Another warning sign is economic imbalance. High consumer debt, inflation, and interest rate changes all create conditions where even a small shock can trigger a chain reaction. But here's an important question for you. When you hear market crash, what do you picture first? Is it your retirement savings disappearing, your house losing value, or something else entirely? Drop your answer in the comments. I want to know what worries you most because it will help guide how you prepare. Now, let's talk about mindset. Many people panic and sell at the worst possible time during a crash. That's why preparation isn't just about money, it's also about psychology. You need to train yourself to stay calm, rational, and ready to act. One technique is to visualize scenarios. Think through what you would do if the market dropped 20%, 30%, or even 50%. Having a plan reduces panic and increases your chances of making smart choices. Another smart strategy is to learn from history. Market crashes are not new. From 1929 to 2008, crashes have happened again and again. And in almost every case, people who stayed calm, diversified, and kept cash on hand recovered and even thrived over time. The lesson is simple. Prepare, don't panic. Here's a question for you. If a market crash hit tomorrow, would you be ready? What would be your first move? Drop your reply in the comments. I want to see how prepared everyone really is. Before we go any further, if you're finding this content useful, don't forget to like this video, subscribe to the channel, and share it with your friends. If you enjoy practical advice like this, we have plenty more coming your way. And trust me, being prepared financially isn't just smart, it's empowering. Let's address one last critical point. Opportunity in crisis. Crashes are scary, yes, but they're also opportunities. People who prepare can take advantage of lower prices, invest strategically, and position themselves for long-term growth. The key is to be ready, not reactive. Ask yourself, when the next opportunity comes, will I be in a position to act, or will I be scrambling just to protect what I already have? Type your thoughts in the comments. I want to hear your strategy. So, to recap, the 3 moves every American should make now to survive and thrive during the next crash are: secure cash flow. Build an emergency fund that covers at least 6 months of expenses. Diversify your investments. Don't rely on one type of asset. Spread your risk across multiple avenues. Reduce debt. Pay down high-interest loans to free yourself from financial pressure when the economy slows. But beyond these 3 moves, remember, skills, mindset, and readiness matter just as much as money. Prepare gradually, stay informed, and don't let fear dictate your actions. Let me leave you with this thought. What's your biggest financial worry about the next crash? Is it losing investments, job insecurity, or something else entirely? Take a moment and drop your answer in the comments. I want to know what's on your mind. Remember, the market doesn't have to crash tomorrow for these strategies to be useful. Every step you take now makes you stronger, smarter, and more resilient for the future. So start building that cash, reviewing your investments, and trimming debt today, not after the headlines scream. Thank you for sticking with me. If this video gave you insight, don't forget to like, subscribe, and share it with someone who needs to hear this. Financial preparation is power, and the sooner we act, the better off we'll all be. Now go ahead, take the first step. Review your finances, make your plan, and start acting. Because the truth is, 2026 might be closer than we think, and being prepared isn't just smart, it's essential.